This is the Norris Group's Real Estate Investor Radio Show, the award-winning show dedicated to thought leaders shaping the real estate industry and local experts revealing their insider tips to succeed in an ever-changing real estate market. Hosted by author, investor, and hard money lender, Bruce Norris.
Hey everybody, it's Aaron Norris with the Norris Group. It is April 3rd. It's Friday. The show that you're about to hear was recorded starting at 8 a.m. and went for almost 2 hours. And then between that time and noon, when I'm recording this, there's already been several important updates. Please understand we need you to talk to your CPA on how a lot of this applies to your specific information, because it may change what you can apply for and what you can't. And then also always reference the government websites. Over the next month, we should experience a ton of updates when it comes to this, but there are a few changes I want to mention briefly now in case you miss it later on in the show. First of all, PPP definition of payroll now no longer includes 1099 payments to contractors. This is not favorable for landlords who typically do not have W-2 employees. It is expected that your 1099 contractors apply themselves. The required minimum distributions already taken in 2020 can be undone within 60 days, and it does not need to be coronavirus related. That's interesting and good. $100,000 distribution may also be allowed from defined benefit or pension plans if allowed by the plan and if coronavirus related. So you'll have to talk to your pension plan and see if that's even possible. And then finally, plan documents do not need to be amended for the new retirement change rules for minimum distribution requirements, $100,000 distribution and $100,000 loan. So a little bit of an update there. What I'm going to do is on the video page of where this lives on our blog, thenorrisgroup.com, if you go to radio and right under there, the very first option is archive. Find the show that aired today, and as updates come in, and until we do a new one updating everybody on what we've covered today, I'll go ahead and post updates there to keep everybody in the know. Okay? Have a great weekend, and hopefully you find this beneficial. Good morning, everybody. It's Aaron and Bruce Norris here. Thank you for joining us at 8 in the morning. We sort of sent this out last minute to our entire network, knowing that we'd have a lot of people interested in this, and still we have quite a few of you on the line today. So I know this is really important. We are recording this. We're recording this at 8 in the morning on April 3rd. Please understand that you really do need to do your homework because this is changing quickly. We're doing our best job today to give you the most up-to-date, accurate information. Today we're going to talk about tax impacts, SBA loans, and even some California resources. Surprise, Amanda, I added that for you. So, with us is Matt MacFarland and Amanda Hahn with Keystone CPA. We've been working with them a long time. If you're bored under quarantine, you can check them out. Our brunch is on Amazon Prime if you need something to do and you want to nerd out on some taxes. But thank you so much I know you guys must be really busy, so I really appreciate your time today.
Hey, thanks for having us. But I want to tell people, even if you're not bored, check out the brunch recordings. They're actually really fun.
Yeah, a funny story about that. I was, watching Prime Video last night, trying to find something to watch, and lo and behold, one of the suggested items was the 2017 brunch.
That means you're an official nerd. I love it. So
yes.
I'm still working on last year's too. Amazon is very difficult to publish in. But, well, Amanda, I guess I'll follow you just so everybody knows that this is visual. We are producing this. There is a visual component where we have slides. You can find that on our YouTube or on our website under Radio Archives. This will live. So with that, Matt and Amanda, I'm going to hand it over to you. Oh, wait, I lied. I've got a few little updates. Let me give you some updates really quick. Dad, you want to talk about the unemployment numbers quickly?
Yeah, that's, it's staggering numbers. This is 1 week from March 21st, 3.3 million, to March 27th, 6.6 million. To put it in context, I only know the national number. The all-time record prior to that was 695,000. And in 2 weeks, we've done 10 million.
Jesus.
Yeah, that's the worst chart I've ever seen, honestly. I looked at that chart because I had the 2 weeks sort of stacked over, and I have about a 60-year chart.
Mm-hmm.
And there's nothing like this. So that was a little humbling looking at going, wow. And it kind of brings up kind of a point that'll probably overflow into the other things we're going to talk about. Unemployment's been around for a long time, but not 20 times the normal volume. So logistically, the same thing's going to happen to banks that are dealing with these programs we're about to talk to. So is it your opinion that they've sort of made this a very simple process, or you think it's going to be very cumbersome to try to get through, just in general?
The forms we're going to show you today, Amanda. I do have the forms, the updated forms for the economic injury program. It's a one-page form. It's about as simple as you can get. Now, the local banks are already saying that they're not ready for these.
Yes.
This is going to be messy.
Yeah.
So
Rick Dalton, I talked to him this morning. He said, yeah, he's been on top of it because it's sort of like there's a limited amount.
Yeah.
And so the bank already going, we don't know what to do with this. So.
Yeah, and depending on how this goes on, everybody might, just because you apply doesn't mean that you have to accept it if you are approved. So, a few other things I'd like to make everybody aware of sort of at the county and city level. You really have to watch the eviction process. So Gavin Newsom on March 27th came out and basically had some really great guidelines of how limiting the expectation of no evictions, foreclosure moratoriums, but he also gave permission to the counties and cities to adjust those as needed. So as an example, the city of Riverside on Tuesday, March 31st, they basically said it's a 6-month, no late fees, and eviction on moratorium for both residential and commercial. So if you really have to dig into the local level and monitoring what's happening. At the county level, the county of Riverside banned short-term rentals effective immediately. That was, I believe, as of the 30th of March. Meaning if you got caught, you could, what was happening is that hot spots like LA with the coronavirus, people were exiting into the beach, the mountains, Palm Springs, and they're like, absolutely not. So effective immediately, you can face $1,000 fine per day or jail time if you get caught. So if you have a neighbor who has never liked your vacation rental, now would be the time to really stay on top of that. Some transaction issues you need to be aware of. There were some rumors going around that title won't insure because hard money is part of the mix. That is true and false. It depends on who your hard money lender is. There's a lot of large and medium size that basically are just bailing the market. The way that they were structured, they're not going to be around for the foreseeable future. Our local title company we've worked with for over a decade said that we are going to be fine and there won't be an issue. So, but you just don't want to get caught by surprise. Also, recording issues. A lot of government employees are off. They're working from home. So if you're not working in a county that allows for electronic recordings, you might be in trouble. Or if you're working with a title company that doesn't have the ability to record electronically, you might be in trouble. So just be aware. Notary issues. The California ALTA, American Land Title Association, posted an update on their website this week that said that California is going to allow you to do not the mobile notary, the teleconference notary. If it's allowable in another state, you can use that as part of your transaction if you need it. So hopefully that helps. And then fraud and working remotely. All of us in the real estate space, I can't tell you how many fraudulent emails I've gotten in the last week. You have to be very careful. The DRE posted some information. If you're dealing with people's social security numbers or sensitive information, you cannot have employees have that at their homes. You need to have them logging in remotely. There's no way you as an employer can protect yourself if they're not doing that. So yeah, just be very, very careful on the fraud. All right, now on to the main event. Matt and Amanda, it's all you.
Well, yeah, I was going to say, going to we've had 3 huge changes come out in 2 weeks, and just in the tax kind of arena, accounting arena. Never seen that before. But like anything you were mentioning earlier, and this is only accurate as of right now. I mean, they're gonna change this probably 100 times in the next month, just as things pop up, as people are applying, people are asking questions. The IRS has got to frequently ask questions on their website. I mean, imagine the number of versions there's going to be of that. So.
Yeah. And just for all our listeners, just so you know, Aaron and I are chatting during this live webinar to update slides as information comes in a little bit.
Yeah,
But
the interest rate doubled with one comment. Wow.
You're right. You're right. During our show. So anyway, thank you so much for having us. This is a unprecedented but somewhat exciting time, I guess, for us as CPAs. We've never seen so many changes simultaneously.
I can't believe you just said that, Amanda. You're so nerdy. You're reading all these documents, going, "Oh my God, how cool is this?" I'm reading them too.
Yeah. So we have a lot of information to cover. I think Matt and I, we really hate reading from the slides, but we've taken a lot of time to kind of pick out the most relevant information. So to a certain extent, we will be going, directly through the slides. And I guess, for Bruce, Aaron, and the listeners, any questions, happy to answer as we go along or towards the end. We've split out the tax changes into three different components. The first component we want to talk about are changes that we think will be impactful to many people. So to the majority of listeners. So things with respect to individuals, the stimulus check, retirement distributions, and just general tax changes real estate investors might want to know about. And then next, we're going to talk about the different loan programs under the SBA, which a lot of people are wanting to get their hands on and trying to figure out what the differences are. And then lastly, the third section, we're going to talk about more employment tax credits. Those deal mainly with people who have employees, but also some self-employed individuals as well. So that's kind of how the breakdown's going to be. So I'll let Matt take over and talk about the stimulus check that's on the top of mind for many people right now.
Yeah, so we're getting a lot of questions about this, obviously, and basically you're kind of breaking it down to essentially $1,200 a person. If you're single, if you're married, that's $2,400, and then if you have children, they're adding $500 on top of that per child. Now it's going to be based on your most recently filed tax return. So we're getting questions about that too. So if you haven't filed 2019 yet, it's going to be based on your AGI and your 2018 return. But the kind of the thing to be aware of is that this is all going to be kind of what we call reconciled when you file your 2020 return. So they're basing it on 18 and 19, but at the end of the day, it's going to be based on 20. So if you should have gotten a larger check than you did, you'll get that extra money when you file your returns.
Yeah, so an example might be, if you filed your 2019 return and you have very high income because 19 was still a good year, but in 2020 your actual income ended up being smaller where you're under the phase out threshold. That means you still could get the tax credit when the 2020 return is actually filed. What we're reading is that, let's say you did file for the credit, your 2020 income actually ends up being higher because you're more profitable, that there's no clawback rule. So what you get is yours. You don't have to pay the government back. And on here, on this little chart we've put together, if you're single, you get $1,200, and there's a phase out period. So if you make under 75,000, you'll get the whole 1,200. If you make over, between 75,000 and 99,000, you'll get part of a credit. If you make over 99,000 in adjusted gross income, then you don't get any credit. The calculation of phase out is roughly a 5%. So meaning, if you're at 75,500, you're over that threshold by 500, multiply it by 5%. That's the amount of reduction.
I can see Bruce doing calculations on paper.
Well, I didn't get any. It didn't take long.
It doesn't mean you won't get any. So we'll see how 2020 turns out for you, Bruce.
I better not get any, I can tell you that.
So there was some confusion yesterday that the Treasury was saying, if you only had Social Security income and it would, for a lot of retirees, if they only had Social Security and they didn't need to file tax returns for 2018, 2019, something came out yesterday that said, well, you really need to file, otherwise you're not going to get the rebate check, the stimulus check. This morning they came out and clarified that no, if all you had was Social Security, they already have the information. So even if you didn't file your returns, you will still get the rebate.
And it's our understanding that if based on your tax return, if you had a direct deposit listed on your last tax return for direct deposit of your refund, that's how they're going to deposit the money. If you didn't, then they're going to mail the check to you. Mm-hmm. And then that's also important too, as we got this question a few times, is, well, what if my address has changed? well, then you definitely want to make sure you file that 8822 with the IRS in order to change your address as soon as possible.
Two real quick notes. Go ahead.
Question: Is there an application for this, or is it somehow automated on the information they already have?
Yeah, good question. So no application needed. This is the easiest part of all the tax changes. You will either get it or you will not.
So we can just stop there. That's the easy stuff. We're good.
Okay.
So when are we expected to get this? So as of this morning, they came out and said if the IRS has your banking information, you can expect direct deposit as early as April 13th. So very, very soon. If you didn't have direct deposit information with IRS already, you should receive it sometime within a month of today. So, end of April, early May is what we're looking at. A question I get a lot from clients is, I haven't filed my 19 return. I think 19 will allow me to get a credit, whereas 18, my income was too high. Should I quickly file? The answer is kind of unknown, right? And the reason being, we can prepare the returns and file them today, but with the reduced workload at the IRS, how quickly are they going to be processing it? Are they going to process it before they actually start sending out the check? So it doesn't hurt to try, but it's unknown what if there's a cutoff date in terms of what return they're going to be looking at.
Right. So the point being, if your return's kind of in process and it's close to being done, yeah, probably do what you can to get through with it. But if it doesn't mean all of a sudden drop all your stuff and try and do it in the next week and miss some things on your tax return.
All right, so let's switch over to deadlines and tax deadlines for filing and payment.
Yeah, so this came out of like about 2 weeks ago. They've made a few tweaks to it, but in general, I think the easiest way to look at it is if you had a tax return due on April 15th, so individuals, trusts, and C corporations that had a calendar year C corps with a 4/15 deadline, those returns the deadlines for those returns have automatically been pushed back to July 15th. There's nothing that anybody needs to do. There's no extension forms that needs to be filed. The thing that was not extended was partnerships and S corps that were due on March 15th, because this kind of all came down right around that time period. So those returns were not extended. So if you didn't file by March 15th, hopefully you did the proper thing and filed your extension form like you're supposed to every year anyway.
Yeah, and if you didn't, because again, that kind of came out right around the government, the stay-at-home order started coming out. So if you haven't filed extensions and you have a partnership S corp or a fiscal year and C corp, we do recommend you try to get those returns filed as soon as possible because you cannot file late extensions. So technically, those returns are late. For a lot of investors hold rental properties in LLCs. So whether your LLC was automatically extended or not, depends on how your LLC is taxed. Okay, so if you own an LLC with other partners, other investors, generally you're probably a partnership. That means it had to have been filed or extended by April. If you own the LLC just by yourself, through your trust, or just with a spouse, generally those are disregarded entities, which likely means you get an automatic extension from April to July.
And so the other good thing about this is with the deadline being pushed back, the deadline to actually make your payments by April 15th has also been pushed back. So if you were going to owe taxes for the 2019 year, you do not need to make those payments until July 15th. Now, that doesn't mean you can't file your return before July 15th. So we've got clients, like I said, who are probably 95% done with their returns. If they owe money, you can, electronically file now and wait till July 15th to pay. So there's no downside other than, if there's some reason why you don't want to file your return right now, obviously. But generally speaking, the payments are not due until July 15th.
So something really funny, if you look on the next bullet point, for those who need to file quarterly estimated payments.
Yeah, this is not a typo.
The 2020 first quarter estimated payments that what generally is due April 15th has been pushed to July 15th. Okay, so that's part of the benefit. However, the second quarter payment that are generally due June 15th is still due June 15th. So if you think about it, we have clients that are saying, okay, so you're telling me I have to pay my second quarter estimated payments in June, but I pay my first quarter payment in July. And the answer is yes. Unfortunately, that's how the law is written currently.
Well, yeah, currently we're not telling you that's what you need to do. The IRS is telling you that's what you need to do. So
They win.
yeah.
So we'll see if this ends up being the case. But yes, for now, plan to pay second quarter by June, first quarter by July.
Just
Now,
just real
go
quick, we
Yeah.
are getting some feedback. People can ask questions. You just have to bear with me. This is going to be intense because there's so many people online. We'll get to as many as possible. One of the reasons
Totally.
that we're covering this is not just for you online, but you have to realize in the next month things are going to get scary. You're not always going to be dealing with rational people because it's just scary and they're in financial distress. So the hope is that we record this and you can send this to tenants and they can understand what you're going through, but they can also get resources. A lot of times there's an education problem. So like here in Riverside, we don't have a local media that's very strong. We're listening to LA, and what's happening in LA isn't necessarily happening in our region. So yes, we're going to cover a lot today, but yeah, we're trying to cover both sort of the real estate investor, realtor space, but also keep in mind, this is hopefully going to be good for some of your tenants as well.
For sure, yeah. Another thing to keep in mind is what we just talked about is all kind of the federal tax rules. So every state, all the states have their own tax rules. Now, there is a good chart that the AICPA came out with, and if it's not part of the link is not in here, we can make sure that it gets shared. But the AICPA has done a good job of summarizing what each of the states is doing in response to what the federal's doing. Now, a lot of them are following what the federal's doing, but not all of them, obviously. So now California, here in California, they are actually have basically extended everything to July 15th. So anything that was due March and April, essentially, again, this can change tomorrow, but as of right now, kind of payments and filing deadlines have been pushed back to July 15th. And that includes 2019 year, and that includes the 2020 year. So a lot of us in California know we got to pay $800 minimum tax every year for each LLC or entity doing business in California. That's usually due April 15th. That's been pushed back to July 15th. And then also there's
Matt, you got
prepayments for other prepayments too.
You got a little quiet there for a second. Are you close to the mic?
Oh, sorry. We had a microphone falling over, but can you hear me?
Yeah, there you go. That's better.
Okay. So as I was saying, so a lot of the states have their own rules. Just check with your own state. We've got a good link that we can provide to everybody of the different states.
Yeah, and this is important, for a landlord and you own properties out of state, odds are you've been filing out of state returns. So do check on those, or at least have your CPA check on those, because New Mexico, New York, they may all have different extension deadlines and things like that. So the last thing on here, IRA, Roth IRA, health savings account contributions also extended. So if you haven't made contributions, you can wait. The kind of not as good news was something, with respect to real estate investors, two of the biggest tax deferral opportunities that we have currently, the 1031 exchange and opportunity zones. We get a lot of questions from our investor clients. There are no additional time extensions allowed. So as far as it currently stands, 180-day rule to reinvest money in ozone or reinvest money in a 1031 exchange replacement property, we haven't seen any relief coming out from the government regarding those deadlines.
With your experience, Amanda, let's say you're building a new construction and there's evidence that you can prove that literally there was a shutdown, no one was allowed on the job site for 60 days. Will the IRS consider that then?
Yeah, I think it'll be possible. If we take a look at, one of the opportunity zone things, and they say, okay, well, there's certain parts of the transaction that could be allowed for additional time if it was due to government issues. So yeah, it's highly possible that ends up being the case. I think reasonably speaking, that makes sense. But I just haven't seen anything from the IRS in terms of, broad statements saying, hey, you're going to have additional time, or time is frozen right now, so we get to do that.
Okay.
So that's kind of the unknown, right, with a lot of things in the tax world.
Okay.
So on the next slide, we talk about retirement distributions, and I think, Aaron, you make up a great point. A lot of these not only apply to us as taxpayers, as investors, but also with respect to how we deal with our tenants. So the IRS is giving most people a great opportunity that if you needed cash and you need it fast, you can tap into retirement accounts without penalties and potentially, without taxes. So again, talking to tenants, if this is something, if your tenants have, significant amount of money in their retirement accounts, that is a possibility for them to access to, be able to pay rent.
Yeah, and keep in mind this is for COVID related distribution. So, have you been adversely financially impacted by what's going on? Have you had to take care of somebody? Have you been laid off or reduced your work hours? Those are all reasons why that can qualify for taking the distribution. It is a self-certification process. So, kind of to your point earlier, and hopefully everyone's going to be honest in these processes, but I can imagine the fraud that may be coming out of some of these things. People are trying to realize that, hey, I can send emails and access people's retirement accounts, things like that. So, but yeah, it's a self-certification. So there's no application. You go to your retirement custodian, request your distribution like you normally would. And then, again, it's free from the early distribution penalties, and the taxes can be delayed over 3 years, or you can repay it over 3 years, depending on your financial situation.
Yeah, it's almost like a loan, if you will, from IRAs, because in the past we could never have taken loans from IRAs. So this is sort of an opportunity to say, okay, my money's in the IRA, it's in the stock market, maybe it wasn't doing well, maybe I'll take it out for, a year to 3 years and invest in something else, and and I always have the opportunity to pay it back and avoid any taxes and any penalties. If we move to the next slide, so coronavirus related 401k loans, now you can take a loan up to 100% of what's in the account, and maximum at 100,000. So if you have $100,000 in a 401k, you can take out a $100,000 loan. And this is per 401k, that's not part of what they consider a controlled group. So for example, if you work at Google, and you have a 401k there, you can take out a loan. You also flip real estate on the side. You have your own solo 401k. You can take out another loan on your solo 401k. So it's not, an aggregate of all retirement accounts. There is a deadline for this currently. So the eligible loans have to be taken out by September 23rd, kind of a random date, but they just said around 180 days after the CARES Act. So no 401k loan requirements at all. This is for
repayments.
Oh, no repayments. So this is for new and existing 401k loans. So if you had a 401k loan before, you don't have to pay it back in between March and end of the year.
And they're also
a quick question on this. That's a really good question. If you take that loan and you were able to make money on it, you're paying interest into the IRA, but you can keep the profits from the loan that you've made to yourself, correct?
Correct, yes.
Mm-hmm. Yeah.
Okay, just curious. That was a good question.
Yeah. And then the other thing with the retirement accounts is important to know is that required minimum distributions, if you were of the age where you're starting to take those or have been taking those, they put a moratorium on those, so you're not required to take them in 2020 if you do not need them. Now, questions have come up a lot about, well, what if I've already taken RMDs for 2020 year? Well, the IRS is going to allow you to roll those back into your retirement account as if the RMDs never happened. Now, technically speaking, you're allowed one rollover you're supposed to roll it over within 60 days. Now, obviously, if you take RMDs once a month or once a quarter, that may be, or a couple times a quarter, that may be hard to do, obviously. But I think the reasonable expectation is that the IRS is going to put an extension on that 60-day or waive that 60-day thing for 2020. But as of now, that hasn't happened. So, but that's what we're kind of expecting them to do.
Question on the logistics of this. When you're taking a loan, there does need to be an interest rate, correct? Can there be a negative interest rate? What interest rate are we looking to set that?
What a good question. So generally, it's the applicable federal rate at the time of the loan. So we'll see. It's supposed to be whatever the current reasonable rate is. And so yes, if the U.S. goes to a negative interest rate, I guess that becomes the norm. But yeah, I'll leave it up to Aaron to come up with these crazy questions.
No, believe me, I'm getting a lot of interesting questions, so I'm not going to take credit for all of that. But it's like you're creating a standard loan. So talk to your 401k, your self-directed IRA provider. You're going to have to fill out some paperwork, and they'll help you with setting the interest and stuff. But there was a question about catching up on interest. I'm like, well, when you're taking out a loan, you're setting up the interest going in. I
Yes,
guess
correct.
if you made profits and you put it in, I don't know what that looks like. So
I think what you would do, if let's say you took out money from your 401k or IRA, you would only repay what you take out. So the profits you would just keep, right, as your own
Right,
money.
right.
Two quick things on this. So the loan is for the 401k. The IRA is technically a distribution, right? So you can take that 100,000 distribution from IRAs and 401ks, and you can repay those. But on those, you don't have to have interest because those are just distributions. It just so happens under the new rules, you can pay them back. The 401k and the solo 401k, those are the ones that you can take a loan and you pay yourself interest. So a little, slight difference. A really important thing I want to make for our listeners is we're no way recommending taking money out of retirement account, okay, unless there's an urgent need for that money, or you have an investment that you can make with cash that you cannot otherwise do using retirement, like a self-directed account. Okay, so it's a benefit to those who need it, but not really any particular reason to say let's go ahead and liquidate the retirement account into cash, unless you have a specific investment that makes sense to do so.
I think it would be helpful too when we get further on down the line and we talk about the idle loan. The one-page form to me would be perfect documentation showing that you've been proactive, you've applied for that, but that also will, sort of timestamp when you sent that in, and it's got some numbers that you can just document. So there's not always clarity on, what constitutes need and how do I document that. But if we can use something else that the government is looking at, that would be good.
Yeah. All right. So on the next slide, we're going to move over to some more general tax changes, whether it impacts you or not. I think a lot of people will just need to talk to their CPA because more analysis needs to be done.
Yeah, so they've brought back the NOL carryback. So an NOL, net operating loss, if you have an overall loss on your individual return or maybe a corporate return or something like that, now your overall losses can be carried back up to 5 years, and this is applicable for losses in 2018, 19, or 20. And then they also removed, there was a rule where you could only use 80%, or you could only offset 80% of your income when you're using an NOL, whether it was carrying it forward or back. They've taken that away. So theoretically, if your loss is as much as your income, if you carry it back to 2013, you could, eliminate all of your tax back in 2013 through this NOL carryback.
Yeah, we don't have a ton of clients that will be impacted by this just because, there's 18, 19 have been, generally pretty good years for real estate. But we do have a handful that, had large write-offs that we're going to be looking at the possibility of doing amended return. Essentially, the goal is to get an immediate cash, right, rather than having it sit with the IRS.
Didn't fix as part of the Tax Cut and Jobs Act is that qualified improvement property eligible for 15-year treatment, which means that you can take bonus depreciation on this. And this is essentially stuff that you're doing to an interior portion of a non-residential building. So commercial property can't be brand new construction, and it's got to be made by you versus the difference, I guess, being made by a tenant where you're the landlord giving a tenant improvement. That wouldn't qualify. But the benefit of this is that you can now take immediate first year bonus depreciation on it versus spreading it out over 39 years. So that's a huge change.
Yeah. And then two ways to change it. You can either file amended 18 or you can catch it up if you haven't filed your 19 yet. Or if you already filed 19, you can do an amended 19. But again, that's something likely, that your CPA will be talking to you about.
A couple other things to kind of be aware of. Again, some of this may not be applicable to everyone's situation, but it's good to just kind of to know it, or just know it's out there in case you come across it. There was a overall loss limitation put in place by the Tax Cut and Jobs Act. That's now been eliminated. So what it was is that you could essentially aggregate all of your business losses, and the most you could take in 1 year would have been $250 as a single or $500 as a married couple. They've now taken away that limit. So effectively, if you happen to have a really hard year and you lose, between your rental properties, if you're a real estate professional and other businesses, you lose, I don't know, $1 million. you can now deduct $1 million theoretically on your tax return without those limitations that were in place.
Yeah, and this does impact quite a few of our clients. Just people we filed returns for in 18 and parts of 2019. So a common example would be, we had a client that, maybe bought one or a couple apartments, did a cost segregation, created a big loss, using that loss to offset income from their medical practice or their flip business. So the old rule, the old new rule, the old tax reform rules, it was limited. We can only use 250 or 500,000. So now for those people, you can go back and amend those returns and use the losses to offset all those income without these limitations. So that's probably a pretty big one for people who, again, had large write-offs in 18 or 19 that were previously limited. The other one, there was an interest limitation. I don't know if a lot of people were impacted by this. Mostly this related to people who were investing in syndications, so apartment syndications, commercial real estate syndications. For those types of pooled investments, there was a limitation that the IRS came out with, which says if you're a syndication that's termed to be a tax shelter, okay, sounds like such a dirty, bad word, but that's what they were calling syndications. And if you were invested in a syndication to the extent that you had interest expenses, which, most apartment syndications do, right? No one's paying for those, all cash, that the interest was limited to 30% of taxable income. And, again, for most of those types of investments, we didn't have taxable income. In fact, we had tax losses because we took a bunch of deductions and cost segregation. So the interest was limited to 30% of taxable income. Now they've increased it to 50%. And also there's different ways now we can calculate to essentially get the most interest deduction possible. So if you've invested in syndications or if you've syndicated your own deals, it is possible that this might be an opportunity to go back and claim some refunds.
And another thing is just kind of to be aware of is that the IRS has come out and said they're not going to be starting any new audits or collection process or installment payment programs for now. Now, this doesn't mean that they're not continuing with existing ones. They've actually come out and clarified that. So if you have an audit in process, theoretically that is going to continue. But again, that's going to be dependent on people's work schedules and availability, right? So,
Yeah. And then the last thing is other tax change. In the other tax changes, property tax. This is the question we're getting a lot. Do I have to pay my April property taxes? So haven't seen anything that's postponed, but since it's at the county level, I think it makes sense just to check with the county and see what the rules are, because counties, county offices might be closed. I guess there's an argument that they might say, well, you can always mail it in, you never really walked it in anyways, but so that I think is going to be a county by county. Should we take questions, Aaron, or should we move over to the
I was going to say
SBA
that.
stuff?
Everybody on the line, we are recording this. We know that today is going to be a little bit longer than usual, and we're going to post it complete online. We're not going to throttle it out 25 minutes at a time. We're going to do it all in one chunk. So yeah, let's do a few questions about this because I am getting some good ones. When is the penalty-free loan taken from the IRA due again? Due back. So if it's a distribution, it's not a loan, they said, but
Yes.
when do they have to put it back? Is there a time frame?
3 years. So on the IRA and the 401k distributions, you can be repaid within 3 years to avoid the tax. If you don't repay it, and then the money that came out becomes taxable, you can delay the taxes over a 3-year period as well.
And that might work out well because it's a similar question regarding the 401k loans. If you cash out and you get laid off and you end up needing it, is it fully taxable? And I think the answer is yes, it stands as a distribution. But if you've had a bad tax year, talk to your CPA and see how you're going to throttle that tax payment over 3 years. You might.
Yeah, exactly.
Yeah. And we're actually, Matt and I are brainstorming. We're going to put together maybe kind of a list or even a webinar on, strategies to consider in the downturn. So one of the things we're thinking about is, Roth conversions, right? Because stock values are low, maybe real estate values will become low. Bruce will tell us if that's the case or not, but might look at converting some money to Roth because low values, and also maybe where, you happen to be in a low tax bracket this year because of lost income and things like that.
Good point. Can required minimum distribution for a corporate pension plan for 2020 be undone?
Required minimum distribution for a corporate pension plan.
That's, I think that they said was an unknown, at least in the AICPA webinar I just attended, because the pension plan is the way I can't remember the way.
It was
it's for the
something. Yeah, it was
company.
something about. It was almost like this RMD thing was specific for IRAs and employee retire, like 401k plans
Yeah.
specifically.
I think they just haven't really clarified whether pension plans fall within that definition, because for the pension, it's, it's part of a pooled fund. So I've not seen any clarity on whether you can take money out of like a defined benefit or a pension plan. But yeah, we'll kind of take a look and keep you updated if anything comes out about that.
This is a really good question about, you know what, I'm going to save that one till we get to the SBA stuff, because we might end up covering that. Let's see, if we owe federal taxes on our 2019 return, are they due April or July 15th?
They are due July 15th.
Okay. Is there any tax on the profit resulted from the IRA money? If they pulled it out, the answer was if you make a profit after doing a loan or pulling it out, you're paying whatever taxes on profits you make.
Yeah, just like you normally would with any other deal or.
So yeah, if we were to go over an example, we take out $100,000 from our IRA, right? And we don't pay taxes on it yet. And that $100,000, from that we make $10,000 of interest income. You pay taxes on the $10,000 of interest income, just like you would for any other interest that you're making individually. And then if you put that $100,000 back into the IRA within 3 years, then you don't pay any taxes or penalties on, having use of that money for that period.
If you have stock losses in 2020, can you use it for your 2019 taxes?
If you have stock losses in 2020, use it for 19. No, I've not seen anything that allows you to do any capital loss carryback. So capital losses are still rules where you can deduct capital losses against capital gains, and if you have an excess capital loss, you can deduct $3,000 that year against your other sources of income.
I will say we have clients who have already sold stock for huge gains in the first quarter or the very beginning of 2020. And so if you already have large capital gains, consider harvesting some stock losses, because they do offset each other within the same year. Okay, so that is something to consider.
I have several seller financed homes. Owners are calling asking for relief due to job loss viruses. They have balloon payment. How do I handle their non-payment of mortgage and interest due? Dad, are you listening to the questions?
Your dad typed that question.
Yeah. Well, I know you did. Hang on. The question is, I have several seller financed homes. Owners are calling asking for relief due to job loss. They have a balloon payment. How do I handle their non-payment of mortgage and interest due?
Yeah, I guess I would really try to deal with it individual and make sure if what they're saying is accurate. We've got the same thing. We have trustee payments. The whole business surrounds that, rent payments. So, and all of those people are probably relying on an income. And so I think it's one of those times where we just might have to push the pause button if we have an individual that's really in a spot. So if you have a business that literally is closed because you have a restaurant and you can't open it for 90 days, but he's paid you for 2 years, I guess I'd be really patient with that type of person. If you're getting lied to, which could be too, then I guess I would get to the bottom of that and put that person in a different category, and I'd have a different reaction to it.
Well, this is where the sooner you know. Gavin Newsom's rule was that they have to give you a 7-day notice when rent is due. They have to be current, number one. Number two, they have to give you notice. And eventually, they have to give you proof that they indeed needed help. I would try to get that as upfront as soon as possible, because you can be proactive and like submit for the SBA loans that we'll talk about, and then you'll have some proof that this is what you were told. This also answers another question: what if you apply and you don't need it? You can always turn down the loan, or you could take the loan and just end up paying it back if you don't need it. But the idea is get in line, just be very organized, document. But yeah, unfortunately, what I'm worried about is that investors stop the foreclosure and the eviction process per California law as it states. Yes, you're not going to be able to perform an eviction, and that's going to be dependent on the local municipality's code. However, you don't want to wait, in Riverside 6 months to start the process. If they haven't given you proof, you need to process it. So, 6 months from now, they come back and they're like, yeah, just kidding, I was just scared. That starts your day one. You don't get to retroactively go back and start the eviction process. So follow California laws when it comes to eviction. Yes, you won't be able to do it, but just stay organized.
On the other side, and what we're about to get to is revenue that's going to be very generous on the unemployment side. So there might be a lot less excuses for people to skip rent if in fact they're eligible for some of these checks, and we'll get to that in a few minutes.
Okay. Yeah, we better. There's so many questions, guys. I'm so sorry. I don't want to keep them online for 3 hours today. I don't know how much time they have, so I feel like maybe we should move forward.
Yeah, let's get to the business stuff.
Yeah.
No problem. So, so the next section we want to talk about are the SBA loans that came out as part of the CARES Act. And if we go to the next slide, there's actually two programs, right? One is the Economic Injury Disasters and Advance Loan, frequently referred to as the disaster loan or EIDL, EILD. No, it should be EIDL. Sorry, that was a typo. And then the other one, the second program is the Paycheck Protection Program, also commonly referred to as the PPP. Okay, so two types of loans. There, you can apply for both. Okay, so the question we're getting a lot is, should I get this one? Should I get that one? What we tell most people is, if you think you qualify, and we'll go over the rules shortly. If you think you qualify, you can apply for both. There are no costs associated with the applications. And you can always decide later whether you want to take one of them or both of them or neither of them. Okay, so this is not being forced down your throat. If you apply, doesn't mean you have to take it. But if you think you qualify, do apply. So we have down below just very high level general observations from us, right? These could be completely wrong, but based on our observation of the rules and requirements, it looks like the PPP program, the Paycheck Protection Program, will probably be more impactful with active businesses with payroll or self-employed individuals. So when we talk about, what are those kinds of businesses, if you're a physician with your own practice, you're a lawyer, you're a CPA with your own practice, or in the real estate sense, real estate brokers, realtors, fix and flippers, wholesalers, developers. That's what we consider active income. Okay. The second loan, the disaster loan, the EIDL, that's also going to be good for the active investors, but also that one might be good for rental investors, so landlords. Will probably fit nicer within that EIDL category. Okay,
yeah, because the difference being that usually as a landlord, your income is not subject to self-employment taxes. There's not self-employment income, or you don't typically have any employees.
Mm-hmm. And it is possible to have a loan for what the IRS considered each trade or business. And an example of that will be Bruce Norris, right? Let's say Bruce has an active business.
Let's talk about Bruce.
Where he's in the lending business, right? So that's our active income. Then that one, you guys have employees and things like that. So maybe you apply for a loan under the PPP program. But as a landlord, maybe suffering losses and things like that. So you can also apply, for the real estate business, maybe apply for the EIDL program. So they don't have to be exclusive of each other. Very common for someone to have, a Schedule C business where they're flipping, and then also have a rental business where they hold their rental properties.
Are you okay? I'm a W-2 employee, and all my rentals are in my own name. W-2 is not impacted, but all my rental income is. When I'm filling out these forms, am I putting, everything on my taxes, the gross, or am I just including what's on one of my schedules for rents?
Yes, that's a really good question. So the way that I'm looking at the forms, that I think because it's each trade or business, so I would make the argument that as an employee, that's a different trade or business than your rental real estate. So if we're talking about what is the gross income for your trade or business, that seems to be, it would just be my rental income, right? And then if you're applying for a different one for your fix and flip, what's the gross income? That's last year's gross income for the fix and flip business. It's a little bit difficult on kind of how they're going to treat the legal entities. In looking at some of the forms, it asks for tax ID number, entity name, and I imagine eventually they'll want copies of the tax return. So I think that is one of the factors that, if you have an LLC owned by, more than one person, it files its own return, maybe that ultimately ends up being a loan application. And then everything, disregarded LLCs, maybe as part of the personal return, ends up being one loan package. But too early to tell. That's, just kind of how we read it.
I think everybody should approach this as they're going to get audited. I didn't even go through an audit. I'm sorry. You really have to know your stuff.
I don't know. I think the IRS it'll take a long time for them to catch up. And, just kind of based on, we don't have a lot of audits go through our office, fortunately, and we would like to keep it that way. But it's so funny. A lot of times when we talk to auditors, I think even we had a colleague talk to an auditor that said, hey, what do you think about the new, and this was, a year ago, like the 199A for real estate investors, and the auditor's response was, oh yeah, we have an internal training coming up to learn all about that coming up. So I'm really excited to learn about it. And it's something that, we've been sweating over for the last year and a half, what's the eligibility? What do we need to do? What's the documentation? So yeah, I think it'll be a while if it ever gets audited. But, nonetheless, we do want to be honest. You don't want to falsify anything because this is a loan with the government and you don't want to go to jail, right? So that's the main thing.
That could make this a lot worse if you had to go to jail.
Yeah.
So talk about
that right now.
I thought we were letting it go.
Very funny. Okay.
Talking about the disaster loan. So, in terms of eligibility, one of the big kind of lines they're drawing in the sand is in businesses with less than 500 employees.
Which I think is the majority.
Yeah, it's a lot. It's a majority that you're doing this for, obviously small businesses and stuff. So it's going to be sole proprietors, self-employed individuals, and businesses with less than 500 employees. And the underlying assumption here is that you're losing revenue and that you need this money to help kind of overcome that loss of revenue. Now, keep in mind, there's a few ineligible industries. So, gambling, adult movies. There's a couple other things the IRS mentions on their frequently asked questions, but assuming you don't fall into one of those, then you should be okay. And then, how much is available loan amount? You can get up to $2 million for working capital. And now 10,000 of this is going to be an advancement up front. So when you apply for the loan, the 10,000 is an advancement up front and supposed to be available within 3 days of application. Will kind of remain to be seen whether that actually happens. But and then the 10,000 is actually forgivable even if you don't actually end up if you get denied, or even if you say
just denied.
Just denied. Okay, so
all right, so what's the loan used for? The loan proceed and the 10,000 advancement has to be used for payroll payments, as well as payments to independent contractors, rent, interest. Okay, this is important. Interest, not principal. Holding cost. So for rental activities, holding costs, utilities, property taxes, things like that, and just general business expenses. The eligible expenses that you can use the loan money for is from January, so it goes retroactive. Okay, for what you've already paid for. That doesn't make sense to me, but that's what it is. So it can be used for expenses from January through December of 2020. So no personal guarantee or collateral if the loan is under 200,000. 3.75% interest, 30 years. And this is a very important one. Only 10,000 of the advancement is forgivable. Okay, the rest is not. Even so, they give you a loan, you use it to pay interest and holding cost. Only the first 10,000 could be forgiven. The rest you still have to pay the government back. So it's just a true loan, kind of in the general sense. So let's see.
I think one of the questions I'm getting right now is what if they don't have employees?
So this is the one that does not require employees, right? So if we go back to a couple slides, who's eligible, sole proprietor, self-employed, and businesses. So it's not, so anyone, right? If you're a sole proprietor, you don't have employees, that's fine. Temporary loss of revenue. This is, so a lot of people are like, hey, well, my tenants are still paying. They told me they might not pay, but I don't have loss of revenue yet. And if you do the form, so I did the form myself just to kind of see what it was about, and so we can help our clients with it. One of the questions is expected loss of revenue for rentals. And so, yeah, it doesn't have to be actual rental loss. But of course, ultimately in the end, when it's reconciled, I'm assuming at some point you do want, it probably means that you have to have some sort of a loss in the very end.
While we're doing a few questions, I have up on the screen the new form. This is literally a one-page form for the specific, so you can sort of see the questions ahead of time. One of the good questions that just came up is, how does your credit matter? Are they looking at credit worthiness on this?
My understanding is they're not looking at credit worthiness at all. It's just kind of a, need based for the eligibility. So, who is it eligible for, based on that slide that we had previously.
I got a question as far as limitations. So with the very first chart we looked at was unemployment just soared. So how many people would be able to maximize what they're saying is available compared to the whole that might have a problem? If you have 10 million businesses apply per week or whatever the outrageous number is there an unlimited check writing ability, or is this capped at a certain number of dollars total?
No, so there's an allocated amount of funding for these programs, and that's why, later on we'll talk about the recommendation is if you anticipate a need for loans, that you do it sooner rather than later, okay? Because there's a cap on the dollar amount that's going to be allocated to these loans. So, and yeah, we do expect them to go fairly quickly. So the early bird gets the worm, right? If you're not looking at this for a while, it might be gone.
I took a 3-hour course by John Heyer. He did almost a 3-hour course on all these different kind of loans. Highly recommend it. It's on his website. Man, I can't remember where his website off the top of my head. But he had a really good suggestion. Definitely opening a new bank account, putting the money in there, and writing checks against the allowable expenses that you can do. So independent contractors, rent, interest, holding costs, general business expenses. So just be careful, and that's a good way to keep track of it, and you'll know that you're documenting against that so you don't run into problems.
Yeah, that's a great recommendation, for all loans, right? Because we often also see, in the past, we've seen people that refinance on their primary and use that money to buy or rehab their rentals. We always recommend, if you have an LLC, once the refi money comes out, the loan proceeds come out, put in a different bank account. From that bank account, money only leaves for investment purposes, right? So that's a really great tip for, how do we document that this money is being used to pay these people instead of just me going to Costco and stocking up on pallets and pallets of toilet paper, right? So that's going to be important.
That would be your item of choice?
Yeah, maybe. I played the bet. All right, so how do we apply? This is directly on the SBA website. So that screen Aaron shared with us, super, super simple, takes a few minutes. The SBA will likely require additional information later on, right? This is step one. They've said a check could be received or direct deposited to your bank account as soon as 3 days. I applied 2 days ago, so I am expecting my money tomorrow. And if I do, I'll let you guys know how this all works out. And like I said here, apply soon. There are caps available funding for this and the other loan program we'll talk about next as well. So, time is of the essence. One thing that I thought was interesting when I went through the process, it asks you if you want the $10,000 advancement. You check a box to say yes, but it doesn't really ask you how much loan you actually need. So how much loan you actually get, I think that's where all of the additional paperwork will come in. So I don't know if it's going to be a bait and switch where they've said, hey, this is only a 1-page loan app. And then later on we get 30 pages of, supplemental information needed. So we'll see.
Yeah, I think my strategy would be to go to a local bank that you preferably have a depository relationship with, if, the community all of a sudden is sort of tackling them, I mean, I don't know if priority is going to be given to clients with existing relationships, but I'm going to say it's a possibility. So if you've got a bank that can do this, that you have a depository relationship with, I would lean towards that. SBA.gov is where you're going to find links to all the COVID-19 stuff. The links are changing and the forms are changing. So just go there and click on the fresh links that they're providing. I think that's probably the simplest way to make sure you're looking at the latest and greatest.
Yeah, so the next program that's a part of the SBA rollout is this Paycheck Protection Program. And this is for business owners and self-employed people that have employees, or self-employed people that don't have any employees, but you're still, as a self-employed person, a sole proprietor, you're considered an employee for this purpose. Now, one of the underlying eligibilities here, requirements, is that you need to retain your employee headcount and your wages. So the program is put in place to incentivize businesses to maintain their payroll, maintain their employee workforce.
Now, one of the things that's kind of gray for me is whether this applies to landlords. So they do broadly define payroll to include payments to independent contractors. So I think there's a position to be taken that if I have a landlord and I have 1099 contractors that work for me, I have my cleaning crew, my handyman, my property management, these people that I pay 1099 for that, are not really employees, but they work for me on a recurring basis. I think there's an argument to be made that those types of, we talk about headcount and things like that, that landlords might be eligible for this program as well. Now, how much is available in the loan amount? So the loan amount is 2.5% of the average monthly payroll for the trailing 12 months.
Okay, now
There's actually
2.5%, but it's 2.5 times, right?
2.5 times, yeah.
Yeah.
And so so there's a couple different ways to calculate, but this is, looking at the last 12 months divided by 12, you get to a monthly average. That number times 2.5%. Generally is going to be the way people do it. Now, there is a cap of $100,000 per employee, which just means, if Matt pays himself $150,000, the maximum that we use in the calculation would be $100,000 for Matt. So 100,000 divided by 12 times 2.5%. So you go through this exercise with all of the employees.
Okay. Just you keep on saying 2.5%. You mean 2.5 times? Is that correct?
I'm sorry. Yes. I'm sorry. I keep saying 2.5%.
Okay.
But yes, 2.5 times.
I want to clarify on that is if an employee is paid more than $100,000, you could still be eligible for this credit, but only up to 100,000, not whatever they actually make. Is that accurate?
Yeah. So for purpose of the credit, you assume their wages were only $100,000 and not 150 in our example.
Okay. So that doesn't eliminate that employee.
It doesn't eliminate them, and it doesn't change how you calculate the wages for somebody who makes less than 100,000. So if you have a couple employees making $50,000, theirs is still $50,000 as part of this calculation.
Okay. Thank you.
And so the definition of payroll actually includes all types of benefits. So health insurance, sick time, vacation time pay, retirement contributions from the employer. And it kind of, like I said earlier, also includes payments to independent contractors. Okay. Just a little note below, it does not include payments that we are going to take a tax credit for under the Family First Corona Act, which we'll talk about next. But essentially just kind of a caveat that yes, you can calculate all those in the payroll, but you can't double dip. So if you're already getting a credit from the government, you don't also get to count that as part of this PPP program.
Okay.
Sorry, for those of you watching the screen, I'm trying to answer questions while they are talking, giving you what you're asking for at the same time. This is interesting.
No problem. So in the maximum loan amount is $10 million. Similar to what we talked about before, what can this loan be used for? So it could be used to do payroll, employee benefits, independent contractors, rent, utilities, and again, mortgage interest, not principal, and interest on other debt obligations. Now the key here is February 15th. So these have to be expenses. These have to be debt incurred before February 15th. So we can't take out a new loan and then use this money to pay for new debt that you have. Okay. For some of the more creative real estate investors on the call.
Okay, I don't understand what you just said on that. Now, when we're talking about payroll, does that have something to do with the February 15th, or is that that's
No. The
okay?
February 15th is just on other debt that the business may have. So if you have debt that was on your books before February 15th and you got to pay interest on that, then you can use this money for that. But if you take out a new loan after February 15th, you can't use this money to pay that interest.
I got it. Okay.
Now, repayment information. This is a big question, obviously. So part of this program is can be set up to be forgiven, and the amount to be forgiven is going to be equal to what you spend during the 8-week period, essentially after you get the loan. So what are you spending for these things that we mentioned: the payroll, the rent, the mortgage, interest, utilities? Now, keep in mind, at least 75% of this loan must be used to pay for payroll. So now, what you can use it for, we just talked about. But the underlying assumption that you need to use 75% of this for payroll in order for it to be forgiven.
Yeah, and that's something new the IRS came out with. I think it was yesterday. They said, okay, well, you can do all those, but I do want the majority of this to be for payroll. And you can see that's their intent, right? It's called the Paycheck Protection Program. So they're saying, yeah, we really want you to keep paying the employees or the contractors that you have been paying. What we really like about this is, again, part of that could be forgiven, right? If used for the right amounts in the right time frame. The forgiven loan is tax-free, and that's really great. You don't have to pay taxes on that money.
Let's just clarify one other thing, because there's time frame differences. We're talking about 2.5 months times your payroll, and then the loan forgiveness part is 8 weeks instead of 10. Is that accurate?
Yes, and so I think the reason for the difference is that they're assuming you're using it for other things besides payroll. So you need to use at least 75% of it for payroll to be forgiven. But I think the difference in the 8-week versus the 2.5 times your payroll is that maybe you're adding in the employer benefits, the retirement contributions, or other things.
Rent.
Right.
If I hire somebody new, can I use the assistance to pay for new people, or does it only reflect current?
Yeah, no, so that does apply to new employees as well. And in fact, so one of the requirements is loan forgiveness will be reduced if the number of employees are reduced, right? So they don't differentiate between, I used to have Aaron working with me. I got rid of Aaron. Now I've hired Bruce. That's fine. They're looking at employee headcount.
Oh.
So loan forgiveness. I'm sorry, do you have a question?
I'm safe. No one's going to fire me. It's good.
So it's reduced if the number of headcount or employees are reduced, or if there's a more than 25% reduction in wages through June 30th. So again, the intent of the government is they want you to keep the number of people on payroll, and they don't want you to cut their pay drastically, right? So those are two things.
I'm just curious, has there ever been a program ever like this?
Not that I've seen.
Not in our lifetime.
Not that I'm aware of. Yeah.
Yeah, not in our lifetime. And the fact that it came up inside of.
I mean, you're younger than we are, so. I guess.
I'm just astonished, actually, at the speed that somebody got this together. Honestly.
Yeah. And so I mean, essentially, you like the way it's kind of like you get a loan from the government so that they're paying you so you can continue to pay your employees. And this actually was credited by the American Institute of CPAs. They said, instead of everyone going through unemployment and trying to, bottleneck the system, why don't we have business owners, pay the employees? They're already on payroll, right? There is a method to distributing the money to them, keep them on payroll, keep them, on the job, quote unquote, and the government just reimburses the business owners for doing that.
Okay.
So go ahead, loan repayments.
So again, the program is set up to be forgivable. If you follow these rules, but if it's not forgiven, then the loan payments the repayments can be deferred for 6 months, and the loan payments, or the interest you got to pay back is currently set at a 1% rate on a 2-year term. And the other thing, kind of like the other program, is there's no collateral, there's no personal guarantee, the loan is non-recourse. That's kind of some of the other information that people have had questions about.
How to apply? Oh, question?
Is this going to show up on people's credit?
That I don't know. I haven't read about that.
Yeah, I haven't heard anything about that.
I'm just curious. Okay.
How to apply? So this one you apply with your local bank, right? Where you have a, like Aaron said, where you have a, hopefully you have a personal relationship with. The form just came out this morning. Yesterday we saw a draft. Today the official version came out. I think Aaron's trying to pull it up. So I read through it briefly. Again, very, very simple. Some basic information about your payroll, number of headcount. You go through and answer these questions that basically say I'm not a felony and I'm not a bad, I'm not a bad person, not a criminal, things like that. Make some certifications based on, need, what I'm going to use it for. That's pretty much it. You do have to certify the loan is needed. So, like with all these, right, you want to be accurate and truthful in the application, whether you need it, how you're going to use it, to make sure that the loan proceeds are being utilized correctly.
I'm pulling up on the screens where people can find and navigate. Obviously, this can change, but the SBA.gov has these funding options here, and you'll see the different buckets that you can apply. I'm so hesitant to link to forums because they keep changing, so I just want to show people where to go. So for the PPP program, you would go there, and then on this page, they're going to probably keep updating what's here. And then to apply, this is new. I just saw this today, so I'm in 92501, and then it's going to pull up, a list of banks in my area. There's over 3,000 close to me.
Does it say Norris Group as a lender on there?
We are lending, but not these, no. So again, I would lean, somebody in the comments did say that their bank said that they were giving priority to clients. So if you have a depository relationship with a bank, I would call them first. Okay.
Yeah, we have clients who've bank already started sending them the application. So I think, you're right. The banks are being proactive about these too. They're probably inundated with phone calls. All right. So the last section we want to talk about today, I know we've gone a little bit over time already. Also we'll try to be brief on this one. Family First Corona Response Act. We just call it FFCRA because it's too long to keep saying over and over. So FFCRA, basically these are a set of new rules that came out with respect to the coronavirus that requires certain employers to provide employees with a emergency leave and emergency sick leave and expanded family medical leave. So this is a requirement if you have under 500 employees, and that you continue to pay your employees for these types of activities. The government, so the benefit is the government will reimburse you as the employer for the cost of this compensation. So basically similar to that PPP program, but in this format, you pay the employees and then the government will pay you what you pay the employees. So there's no net cost to you. Okay. Now, who's eligible? Self-employed individuals, as well as owners of S Corps, C Corps, partnerships. So this is a big one. You don't have to be a large corporation to benefit from this. You could be a self-employed person. The government pays you to pay yourself. Or you have, if you own an S corporation where you and your wife, or you and or your sibling, you and or your spouse are the only owners, you can again pay yourself and have the government reimburse you for what you've paid. Okay. There's an exemption. Employers with under 50 employees may apply for exemption if it's detrimental to the business. So it doesn't mean you have to apply for the exemption. It just means if you have less than 50 and you don't want to participate in this program, you can apply. I don't know why anyone would not want to participate because it's essentially the government giving you money, right? So let's go over real quick kind of the two parts. So the first part of this is the emergency paid sick leave. So it means that you have to pay sick leave for all full-time and part-time employees and owners who are currently on payroll, self-employed individuals with active income. There's no waiting period for new hires. So you hired if Aaron just got hired today and he had to go on sick leave tomorrow, you have to pay him. Okay, bad news, you have to pay him. Good news, government will pay you for paying him. The benefit up to 80 hours of pay subject to the cap. And there's two. So if your employee or you cannot work due to quarantine orders or because of COVID-19 symptoms, or you're a high-risk individual, then 100% of your regular pay can be reimbursed by the government. So it's up to $511 per day or $5,110 per employee.
So the way I take this is that as an employer, you are required to, if your employee falls into this category, you know, has to take leave because of quarantine orders, they have symptoms or high risk individual. You as an employer, if you fall into these categories, less than 500 employees, you're not exempt. You have to pay them 100% of their regular pay up to a maximum of $511 per day. And then so if their 100% of their pay is less than $500 or $511 per day, the government will reimburse you what you pay them. If their pay was more than that, typically you pay them $511 per day, the government will reimburse you.
What's interesting is that the bottom bullet, it says to care for kids under 18 years of age from school closures. But a lot of people are being able to work remotely. But does the rule specify that needs to come into play? If somebody can work from home and have kids at home at the same time, they can't qualify for this?
Yeah, that's a good question. Yeah. So the other part of this is, if someone else is under warranty and kids are at home, the pay is a little bit less, right? It's not up to 500, it's only up to 200 per day. So currently the way that they have defined it is to say, if you can work from home and you are working from home, then you're not technically on leave, right? So so the employer does not get a reimbursement for what they're paying to the employees. This is for if they're at home caring for the kids and unable to work remotely. Okay, so yeah, so unfortunately that's kind of in our instance, right? For us, for Keystone CPA, we can all work remotely. Kids are home, so taking care of them, but I can and am working remotely, so government does not reimburse me for what I pay myself.
Got it.
So maybe I just have to have somehow shut down my computer so I can't work.
Amanda, that sounded like a cough. I think you're eligible.
I have been.
So yeah, how to apply for the credit? The easiest way to kind of look at this is that if you run payroll already, you have a payroll person that runs payroll for your business, then contact your payroll processor because they will help you take care of the refundable credit. Usually it's going to show up on your next quarter's payroll tax return. And now if you're a self-employed person where you're not running payroll, there really shouldn't be any action needed right now because your credit will show up when you file your income tax returns for the 2020 year.
Yeah.
Now you may want to, if you're expecting the credit, obviously you may want to reduce your quarterly estimated taxes that you would otherwise be paying so that you're taking into account that you're going to get this credit in the future. So we're not giving the government, more money sooner than they need it, right?
And as of yesterday, the IRS came out with a brand new form. It's the Form 7200. I don't know if you can pull that up on the screen, Aaron. So the Form 7200 is another way to apply for this tax credit. Again, pretty simple. I imagine most payroll providers will be able to fill this out. If you didn't want to wait till the next quarterly payroll tax to get the credit, you really needed it right now, this is a way to apply for that credit. So yeah, thank you for pulling that up, Aaron, from the IRS. So it's advance payment. Basically, you get that back right now for paying your employees.
Bruce, you getting all this?
Yes, I studied it all yesterday, so I'm fully versed.
Wonderful. And what's so interesting about this again is that we're not just talking about large companies, right? This is for smaller companies too. So if the company is just Bruce, right? Bruce pays himself, and the company, because he can't work, government pays him. Bruce has his son Aaron on payroll working, but Aaron can't work for one of those above reasons we talked about. But Bruce continues to pay Aaron, the government can pay as well, right? So it is a pretty big opportunity for a lot of our smaller business tax return clients. I will say though, you want to be very careful because I already have clients that are asking me like, hey, I was not on payroll. Can I go on payroll now? Can I add my wife and my kids and my cousins and my grandma? No, I think that would be considered fraud, right? If they're not really working for you, they never have. I wouldn't do this just for the tax credit.
Okay. Do you know if the emergency paid sick leave, does this no, never mind. I'm not even going to ask that.
And by the way, I was kidding. I did listen to 3 hours of this stuff yesterday, and I'm so glad you're explaining it again, because it's new and it's not easy to comprehend it. And there's so many different programs that are actually so helpful to our industry. So people that are renting might have a way to get compensated in a very different way than we've ever had before. So no, it's amazing.
Well, across the board, you can see how confusing this is. So if you're on the line right now and you've got a tenant, you might have to help educate them on where to get these resources. And it's not just at the federal level, it's also at the state and local. Locally, we have a nonprofit creating a fund for a $500 grant, just a $500 grant for people in the Inland Empire if they need it. So just getting down into the weeds is going to be very helpful. So anyway, let's go to part 2, expanded FMLA.
Okay, so this is the other thing that business are required to provide to employees as of April 1st. This is the Expanded Family Leave Act. This applies to all full-time and part-time workers. There is a 30-day eligibility. So if someone just was hired today, they're not eligible for this until 30 days later. Okay, so this is for people who, again, cannot work due to school closure and or as a result of state quarantine orders. Similar thing, this benefit, you have to pay the employees up to 80 hours of pay. There are caps, so it's up to 10. So the first 10 days you don't have to pay them, but of course then they can go on the sick leave that we just talked about before, right? Then the next 10 weeks you pay them. The pay must be at least 2/3 of regular pay. It's capped at $2 per day. The maximum
200 per day.
Yeah, 200 per day, and the maximum of 10,000 total per employee for those 10 weeks. So this, again, you pay the employee because they can't work. The government then reimburses you via a tax credit up to $10,000 of what you paid per employee. Right? Again, generally no net cost to you as the employer. So similar to the last one, how do you apply? Contact your payroll processor. Because it's part of the payroll filing. If you don't have payroll and you are a self-employed on the sole proprietor or Schedule C, that's something that will be claimed when your 2020 return is filed.
All right, give me just a second. I have to unplug the sound and plug it back in. Is it staticky? Hang on. All right, are you still there?
Yeah.
Yeah,
Okay.
it's fine. For the recording's sake, it gets a little bit staticky. Thank you.
Oh, okay.
If we're done, I don't know if we're done with this section. I wanted to ask something about unemployment benefits that are now going to be coming in addition to the state by the federal government. So
we'll get there.
Okay, we're going to get there. All right, thanks.
Yeah. All right, so the next slide, eligibility. This is for businesses who keep employees. Oh, sorry. So the next slide is the last credit, which is the employee retention credit. Okay, so this is different. We talked about sick leave. We talked about expanded family medical leave. This is another credit that employers can get. And basically, the government is saying that you get a credit if you continue to keep employees on payroll, although your business is fully or partially suspended as a result of quarantine orders, or your income went way below, less than 50% of last year's in the same quarter, then you could be eligible for this particular tax credit. So similar, it's based on wages, and it's also a $10,000 max credit per employee per quarter for the rest of the 2020 year.
So will this imply if you don't have if you're one person landlord?
So yeah, that's a good question. That was one that Matt and I were trying to look up yesterday, and it doesn't mention anything that has a different requirement than all the other credits. So I think our current reading of this is going to be that it does apply to sole proprietors as well.
Okay. And probably if you have multiple entities, like I know some people on the line are very creative and have multiple LLCs, multiple member LLCs, Man, you almost have to go through each of these options and see if you can apply for using, different ones. I don't know.
Yeah, I think it's going to be different, and we're getting all types of different questions. Like I was saying yesterday to Aaron, that had a client who has an IRA LLC that's suffering losses. So the question was, my IRA LLC, does it get any benefit? Can it apply for loans? The IRS hasn't really talked about that specifically, but I mean, I would say it doesn't hurt to apply, right? Worst case scenario is that you get denied, or you get the loan, but then you don't really get any of it forgiven, in which case you just pay the government back, right? You haven't lost much in terms of money, just a little bit of your time in applying for these applications.
But then you're introducing leverage into an IRA, which is its own little beast, yeah?
Yeah, but I mean, the trade-off is potentially free money, right?
I
So,
didn't think about
so if I get free money, maybe I pay some UBIT taxes, not the end of the world.
Did you know
That's
much
how I look at
perked
it.
up about that sentence? Free money.
free money.
Free money. Hashtag free money.
Okay.
So yeah, that's it for the tax, kind of the tax credits and things like that. But yeah, if you want to talk about unemployment, yes, the government is now for unemployment. I think they've added another $600. Was it per week?
Yeah.
To unemployment. So, I mean, someone on unemployment between federal and state benefits, various benefits, you might be looking at almost 40 or a little bit over $40,000 per year of income, which is not a whole lot, but that's enough to pay for, I think, normal living expenses, and maybe more money than probably some people were making right before the new program. So I think a lot of tenants can pay.
How long is the government side of that, the national $600 part?
Oh, you know what? I don't have that off the top of my head. I can look it up and get back to you. Or let me look it up now.
I think
while you guys
it's a long time. I think
it is. Yeah, it's quite a long time. I know.
48 weeks or something like that. I'm trying to remember. Again, I listened to it last night, but I think it's the greater part of a year.
Well, I think the takeaway here, one of the takeaways should be, is that if anyone feels the need to go get a cocktail right now in the morning, no one's going to judge you. So.
Somebody says they think 6 to 8 weeks for the $600 a week. I've heard different things as well, but it's just good to know. You'll know what your tenants are about to face and documenting all that stuff and helping them understand this.
So there's a website that was really helpful. I will chat this to you. So it's labor.ca.gov/coronavirus 2019 chart. And I'll send this to you, Aaron, so you can pull it up. But essentially, this is a chart of all the various benefits that you can apply for as an employee if you're unemployed. Disability, paid leave act, unemployment insurance. So a really great resource. I actually just sent that to a family member of mine recently who was laid off.
Labor.ca.gov/chart.
Coronavirus. I just sent it to you in the chat. So if you want to pull that up, yeah, it's /coronavirus 2019 #chart.
Oh, got it. Okay. Actually,
Department of Labor is using hashtags now.
Wow. That's cute. I think I know what this chart is, and you're right. This is amazing because it's got direct links as well to the benefits. So if you have a tenant coming to you, I wish this was in Spanish as well. Maybe we can get somebody who speaks Spanish to create this for us. But yeah, this all in one list with the links directly to the right. So for you who are listening,
there's a button at the top, Eric, of that website that says translate. I don't know.
Maybe I'll translate to you.
Oh, wow,
look at you.
At that.
Let's see if it'll do it. Let's select the language.
Oh my.
Let's do Mandarin.
Right. Let's just make sure.
They really translated this many languages? Wow.
Well, I think it's Google
automated.
Translate.
It's probably automated, I would hope.
So it's got to be totally accurate.
Well,
it's translating. Oh yeah, it's translating.
unfortunately, I don't know if it's going to work. Let me see. I have to go back here now that I've told I want it in Spanish there. Let's see if it will do this page in Spanish. No.
No. Oh, so close.
Actually, wait, no, it was.
It was.
Oh, it did. It did.
Oh
Okay.
yes.
Perfect.
Awesome. Wow, love it.
But
Technology.
unfortunately,
Yeah.
the way that they do
Yeah.
this, though, you can't.
You got to trademark this, Aaron.
The way that it's done, though, just for those listening, you up at the top of the website, you have to hit the translate, but you can't forward them the link if it's in Spanish, unfortunately. So I don't really know how to help you there. You're going to have to explain to the tenant or have somebody explain that it's there, send them the link, and just point out the translate, and then you actually have to go back to the page, which is annoying. But anyway, it's a possibility. That's awesome.
All right. Should we take questions?
Sure. Actually, let's make sure we cover the rest. Did you cover the benefits of this particular retention credit?
Yes.
Okay. How do,
Very similar to the previous one.
okay. Contact your payroll. This is the one I just added this morning, about a half hour before, because California is sort of layering on its own stuff. So the California Disaster Relief Guarantee Program, it's run by the Small Business Finance Center. And I believe the website is, let me see. It's like iBank or something. So it's for small businesses located in California with less than 750 employees that have been negatively impacted. The way that I would look at this is just look at the state essential business list to pull that if you're not sure. And then, of course, if your income is dropped. The benefits are guaranteed up to 7 year. 7 year, the term can be longer. Guarantees up to 85 to 95% of loan interest rates negotiated between the lender and borrower, and the qualifications are based on lender criteria. This sounds messy to me. Here's the link right now, the ibank.ca.gov. The proceeds can be used for rent, payroll, etc. So
The usual, huh?
yeah, but this is on top of anything that the federal is doing. So I have no idea. There weren't a ton of information at this point. It's relatively new. And on there, they even point out a lot of the stuff is coming soon. So I just wanted to point that out. Okay, let's see. Let's get to some questions. And I mean, there are so many questions here. Do you have a time frame that you'd like to end this, Matt and Amanda?
We have 3 hours total, right?
Oh, yeah.
Before the webinar kicks us off.
Are there on the family leave? If somebody is pregnant and they're in a high risk category, whether a senior, and they leave early for the family leave stuff, do you think that will count?
Yeah, that's one of the things is high risk category. So you don't have to be diagnosed with the disease. It could be a high risk. Now, whether a pregnant person is high risk, I don't really know the answer to that. But yes, if you are considered in a high risk category, then that is part of that definition.
Okay. Self-employed doing wholesaling, would it be better to incorporate to apply for a biz loan?
I don't believe so, because they look at each trade or business. So I think whether you are flipping or wholesaling as a sole proprietor or through an entity, that's still its own separate trade or business either way for purposes of loan application. Now, just from a normal tax planning perspective, it could make sense to have a legal entity to try to reduce self-employment taxes. But specifically for the loan, I don't feel like there's a difference either way.
Some of these are getting really personal. I don't know if I should take some of these. Well, I'll ask this. I realize the 500K long-term capital loss in 2019 on a project. Does this qualify under the NOL rule to apply against ordinary income or against long-term capital gain?
Yes. So we're saying is, yeah, if you are no longer limited, your loss was no longer limited to 2018, you file amended return, you create an NOL, that NOL can then also be carried back to a previous year to then claim a refund.
Cool.
If I'm understanding the question correctly, yes. So it could be done.
Are you able to borrow against a corporate pension?
That was when we talked about earlier, unsure whether you can borrow from the pension or not.
Yeah, that's really dictated by the pension itself, right? The paperwork, like if I have CalPERS, I don't think that's allowed.
Yeah, and another question we've gotten, I don't know the actual answer to this, is, now the IRS has came out and said that you can borrow up to 100,000. You can take a distribution, right, for these purposes, whether that overrides the plan documents or not. I think the consensus is that the plans do not have to be updated, and that's an automatic allowance because the IRS the Treasury has provided that. But I also just got an email from a custodian this morning that said, hey, you do need to amend the plan document. So if you don't update the plan documents, then you still can't do it. So I've kind of, heard both sides. I think to be safe, if you have a plan of your own, to be safe, maybe just amend it if you want to allow it, right? To allow for that. Now, if you work for someone else, I think ultimately the decision will be based on your employer if the IRS doesn't give us any guidance. So if you work for Google, the IRS says you can take it out, but maybe the Google plan, 401k plan says you can't yet. I think it'll be up to them to decipher the code and say, okay, what do we feel? Do we have to amend, or we give everybody that wants a loan a loan?
This is a good question, and I think the answer is built into it. Elderly sister, developmentally disabled. Does she count as a dependent? She does not file taxes. Will she get the $500?
She does not qualify as a dependent?
She does. She is a dependent
she does.
on the sister, correct?
Okay, yes. So it does include siblings.
Okay, but but there's a threshold with how much she makes, correct? If the sister is considered a dependent, and you, the older sister, the sister taking care of your disabled sibling, would that count? Do you still get it, or if you're over the threshold of the 99,000?
So I think the question is, do you have to, if the disabled sister happens to make money, do you have to include her income in your AGI calculation for determining this phase out?
Okay.
The answer is a definite, I don't know.
I applied for the EIDL loan, but need to lay off employees until we get that loan. Do you know if this will qualify my business for the loan?
I believe you still qualify, that there is a period. Basically, they want you to hire back the employees as quick as possible, and definitely before June. So yeah, I believe that works. And we have clients who've already laid off employees, but once they get the loan, they intend to hire them back. So I think that is the intention.
Okay.
For you to hire them back as soon as possible.
I think that's why it's backdated.
I'm a sole proprietor who is a realtor, loan originator, and a rental landlord, all in my own name. Can I get 3 SBA loans?
Gosh. I think that will depend on how you file your tax returns. I would say the rental is definitely a separate trader business. If you file your realtor as one Schedule C, that's another trader business. And then, I'm sorry, what was the other? What's the other business? Loan originator. So yeah, if that's yet a separate Schedule C, then that would be a different trader business.
Okay. If you're a rental investor and hold properties under your personal trust, yeah, trusts are going to be big for this audience. It's just, is this just considered a pass-through?
Yeah, I would think so. Again, I think it depends on how the trust is taxed. If it's a disregarded any, kind of like a land trust
or revocable living trust.
And yeah, I think it's just going to be treated as if you're doing it individually anyway.
It'll default to your the Social Security number.
Yeah, I think so. Yeah.
Yeah.
My business borrowed money to buy notes to flip the notes. Now we pay interest payments to those investors. Can we apply for help covering the interest on the loans our business owes?
Yeah, because I believe so, as long as the notes existed prior to February 15th, 2020, because that's one of the eligible expenses that you can use the loan for.
I'm going to skip a lot of these questions all in one swoop. When do I get the money? I think that's the big question right now.
It's whenever the Norris Group funds the federal government.
Yeah, I'm just getting the sense that the small banks are a little unhappy. They don't have what they need. That's what I'm hearing today. You know what? To be honest, I mean, look how quickly they've rolled out all these programs. It is impressive. So there's going to be some fits and starts. So I think we just have to be patient. We have different properties and LLCs in several states. Do we apply for all under our own names or separately under each LLC?
I think that will depend on how your LLCs are taxed, potentially. So if the LLCs are all disregarded and they're all rentals, probably I would err on the side of saying that's going to just be one loan, because eventually they're going to ask for a tax return. And if it's all in the personal return, that's one loan. But now if you do have LLCs that file as partnership returns, then maybe those each are going to be separate loan applications. Because then you can hand in, a loan app with LLC number 1, another one with LLC number 2's tax returns separately.
Okay. I own multifamily, and I am applying for the PPP for my W-2 employees. Can I also use the money I paid to individual vendors and gave them a 1099 as part of the payroll I report?
Yeah, my understanding is you can do that for those vendors that provide, recurring services and things like that.
Okay. Can this loan be used on renovations and capital improvement for projects?
That is such a great area because, gosh, I didn't even know if I was talking to you, Aaron, or not. I was talking to someone and said, wow, if we can start paying independent contractors, let me just, pay someone to do a fix and flip and then apply for the PPP and have the government pay for my rehab. Currently there's nothing that prohibits it, but I just find it hard to swallow that is the government's intent, that they want to help reimburse for, major rehab or building a home. So yeah, I don't know. I think my answer would be, I don't know if would they allow you to do that. It doesn't say you can't right now, but I don't feel like that was their intention in the program.
This is so early in the process too. I think right now we're just finding out who people are and where they're at financially. It's April 1st. So a question that keeps coming up is, I'm independently wealthy. Can I go ahead and apply for some of these? It doesn't mean that your situation won't change as far as income and whatnot in, a couple of months. So you certainly could. The worst case scenario is you would just need to end up paying it back. So.
Yeah, I agree. I mean, it's certainly, maybe you don't need the money today, your tenants are paying, but it is, is it possible they'll stop paying? And if so, would it financially impact your real estate, your business? And, if you wait until then to find out, maybe the loan is gone, right? I think they've allocated about they said 349 billion to the PPP program. If that's gone, and by then is when you feel like you need it, you apply and there's no more money, then, you potentially are going to be in a bind, right? So.
This is a really interesting question because what is the definition of date of disaster for a lot of these rules? Because I know here in Riverside, the county, the city, the state, and federally, I'm 4 layers deep in disaster zones. So does it specify at the federal level? Is it just at the federal state of emergency that's been declared that it matters?
I've not seen any definition of that at all. Yeah, I mean, I think they will define that later on, but at a minimum, I would say it's when the quarantine is announced, right? The earliest point of whether it's at the city or the county or the state level or federally, if they ever have a major announcement. But no, I haven't seen a definition of date of disaster.
What is the cost of goods sold for a service business or say rentals?
It's a good question. I'm not. It begs the question is why it's on there, I guess. But I can only speak from experience from our business. The way we do our financial statements, we consider internally our cost of goods sold as our payroll for our employees, right? Because they're providing the service. These are the costs that I'm incurring because of providing that particular service. So it doesn't include, rent to the building. I don't include insurance, liability insurance, things like that. But that's how I think of it. But I don't know,
Yeah, I think I mean, if you're unsure, the best thing to do is to refer to last year's tax return, right? I think that's the point of reference that the lenders and the IRS will be looking at. So when you filed your tax return at that time, whether it's 2019 return or 2019 financial statements, what did you consider to be cost of goods sold? It's clear cut for businesses that sell stuff, right? If I'm selling stuff on Amazon, my cost of whatever I sold is cost of goods sold. So for those types of businesses, it's pretty straightforward. For landlords, we don't have cost of goods sold. So I think you would just put 0 for the application. For flippers, cost of goods sold is, purchase price, improvement cost, holding cost with respect to the property itself. That's generally what we report as cost of goods sold.
I am looking to refi a property with a 5% loan. Could I use these funds to get the 3.75% and pay off the other loan with it? Just curious.
So getting the idle loan and then having the PPP pay off the idle loan. Is that the question?
I'm not sure. It doesn't really specify.
No, I think the question is they have an existing loan
Okay.
for a property
Oh
or
yeah,
something.
they have a 5% loan. Can the fund
Right.
from the help be used to pay for the expenses of getting a lower interest rate, doing a refinance?
Do a refinance.
So I don't think the money from the idle loan can be used to repay the principal on the existing loan. I think it can be used to pay interest though, right? Is what we talked about.
Yeah, that's a little bit tricky because they're very specific in indicating that it cannot be used to pay off principal.
Yeah, I really like the idea of opening a separate bank account and really sticking to that. It doesn't mean that you can't pay for those other expenses that are allowable by the rules, and then behind the scenes in the other account, yeah, you can use the money that you've freed up to take over that loan. But yeah, I would document this really carefully and not operate in the gray area if at all possible. I know our business likes to do that, but don't do it. We have, okay, I think we've answered that one quite a few times. Is the 19,500 single 401k deferred comp considered retirement contribution under PPP?
So the PPP contribution refers to the employer 401k contribution. The 19,500 is the employee portion. So the employer portion, generally, if you're an S corp on payroll, the employer can fund up to 25% of the W-2 wages. So, if you're paying yourself 10,000, then 2,500 is what the employer 401k would be for that pay period.
And the answer doesn't change. If you're the employer and the employee and you're putting in 19.5 from your paycheck, that's still, even though you're the employer, that's still considered the employee portion. So that wouldn't count for this.
Okay, I got to unplug for just a second so we can clear up the sound. Hang on.
Okay.
1099 contractors don't fall under the payroll umbrella, correct?
They do fall under the definition of payroll. So currently, under the definition, the 1099 paid to contractors does fall within the definition.
For the loans.
For the loans, yeah.
Yeah.
What if all the money in the loan is not used? Is it paid back?
Yep, you just pay it back. There's no prepayment penalties. So you get a loan, you don't use it, you just pay the government back or pay the SBA.
Can you post the link to the 3-hour seminar you mentioned earlier? Yeah, Daniela, you know what? When we're going to transcribe this today, the entire this will live on our blog, and that's where I'll post all the links. And the John Heyer seminar I mentioned, I can't find it on his regular website, but I have the direct link because I emailed them yesterday. Apparently, you want 3 more hours of this.
I mean, you just can't get enough. I think we've been reading up on all this. Matt and I have been attending webinars from the AICPA, from California State Board, from other CPAs in the industry that we respect. And there's just so much information, And I was joking with one of my friends the other day. As soon as I'm done with the webinar, I put my note, write down my notes, listen to another one, and see, things have changed, or someone else's interpretation has changed. So there's so much going on and different interpretations of these things. So you can never get enough, right? So yeah, listen to 3 more hours if you can.
Yeah, I had this question, and maybe I'll just go ahead and ask it. If you have several properties and you don't have your business name, what do I put on the form? And I'm typing back, use your name that appears on your tax return. But is that
Yeah, that makes sense to me.
You
Mhm.
can put down Matt MacFarland if you want.
Co-owner.
I read that if you get a PPP and you are on the furlough, that you have time to bring back your team by June 30th. Have you read that?
Yeah, that's what we were just talking about earlier, where you said, okay, I already laid off people. I'm waiting for the money to come in so I can rehire them, right? So yeah, you want to hire them as soon as possible, but definitely before the end of June.
Okay.
And I think this is happening a lot actually, because I have a friend who works at a local golf course. Been working there years, and because I think of some of these requirements to pay the sick leave and things like that, they put most or all of their employees on furlough starting April 1st, but with the plan to bring them back when when they can open the golf course again. So yeah, it's probably more common than we realize.
There is a question about if you are a franchise, can you still apply for the PPP or the EIDL program?
If you own a franchise, if you're a franchise operator, I don't see why not. There hasn't.
I think it has to do with the 500 employees, right? Because as a franchise, you own a Subway franchise, you have 5 employees in your store, but Subway obviously has more than 500 employees nationwide. I think they have a carve out for that. Don't quote me on this. I think they have a carve out that says you still qualify as a franchisor, as assuming the ones control, or I guess for lack of a better term, are under 500 employees.
Yeah, so if you own 3 Subways and the total of all your employees are under 500, then you should be able to be eligible for these.
Yeah, when you file your tax return, you're not using Subway's tax ID number.
Right, exactly.
If you file a new entity or corporation in the next month, will they be able to apply for assistance?
They do have a carve out for new businesses in 2020. But yeah, so you do have to show that it's a legitimate business, and that you're actually operating it, not just I'm going to form something and do a car wash for one person and stop doing that. But yes, there's a carve out for new businesses that started in 2020. Now I know that applies to a business that's formed in 2020, like January, February. I don't know if from this point on, if you form a new business, whether that's eligible or not.
Up on the norrisgroup.com/resources is where I'm sort of tracking national, state, and local resources for the real estate community. And I sort of break things down into sort of general resources, tenant-related resources, and then small business, just to try to make it fast and easy. Who knows? You might be helping some of your tenants help their employers who are just in the weeds and don't know where to start. Val brings up a good point. There's several SBA, and she puts in quotes, brokers popping up, charging $2,500 to help you apply. Yes, this is absolutely a ripoff. They don't need to pay $2,500 a lot for these. I would just go directly to the government websites where you need to apply, or go directly to your depository bank. If they're approved under the SBA program, they will help you, and they're making money because they're making the loan from the government on the other side. So no, that's embarrassing. So you need help filling out a one-page form? That's not good. So yeah, help people not lose money doing that, and that's terrible that's already popping up.
Hey, I got an email from Karen Hall at UDirect, because earlier I was joking about how a client called and asked about whether their IRA LLC could take out a loan. So she said the loan to the IRA, any loan to the IRA and the IRA LLC must be non-recourse, and you cannot receive personal benefits. So the loan would be made to the IRA or the IRA LLC directly. So yeah, that's a good reminder. If this is allowed, it would be a loan to the retirement account and not to the account holder.
Got it. Well, is there anything else we need to cover? A lot of the question I'm seeing, it's just getting hard to track because there's a lot of it's repeat, and some people came in late. So we're going to put this all up, and I think it answers the vast majority of these. But Karen and Matt, I'm sorry, Matt, Amanda, sorry.
Karen and Matt.
My brain now. If people, are you guys around to take questions? Do you want them to call, email, or you're you're probably pretty busy with clients right now. I know we're pretty busy with ours too, but if people are looking to get a hold of you, how can they reach you?
Yeah, we have a ton of information on our website. I actually just posted some information regarding the COVID-19 tax changes. Right now it's only available to clients, but I will make that public before the end of the day. So check out our website, www.keystonecpa.com. And yeah, if you have questions, you can email, our email is info@keystonecpa.com. That's info@keystonecpa. But yeah, we do have a lot of client questions that we need to attend to first. So, you know, it is possible that we may not get to respond to all the questions we get. We'll try to get to as many as we can. But, you know, at the end of it, a lot of these questions really should be directed to your tax advisor. It deals with how you filed your tax return. So they would be the person best positioned to answer those questions for you. And like I said, Matt and I we're planning on putting together a webinar kind of on the planning side of things. So today we went over all the rules, you know, what the benefits are, but we want to kind of try to strategize and put together some proactive things that we could be considering in the downturn and in light of the new tax changes. So once that's available, I'll definitely share it with you guys as well.
Are you taking on new clients?
We are taking on new clients, although there's a little bit of a wait time. I think, don't quote me, I think Ivory said we're currently scheduled for about 3 weeks out from today, but we are taking on new clients.
Okay.
Do yourself a favor, check her book out. Is it on Amazon? You sort of wrote a book with For Bigger Pockets on advanced tax strategies. You've got 2 books. Is that where they find it?
Yes, you can check it out on Amazon, or it's also on Bigger Pockets. Yeah, we have the, I think both the physical and the audiobooks are available. So check those out.
Excellent. All right. I really appreciate your guys' time.
Yeah, thank you very, very much.
And thank you, everybody.
Thank you, guys.
Yeah, I hope everybody enjoyed this. We'll put it online so everybody can share, and hopefully we can help everybody out a little bit. So
Absolutely.
thank you for joining us on a Friday for, wow, what ended up being 2 hours. So just really grateful for your time, guys. So everybody be healthy and safe, and we'll see you next week.
Thanks, guys.
Thanks.
Bye. The Norris Group originates and services loans in California and Florida under California DRE License 012-19911, Florida Mortgage Lender License 1577, and NMLS License 1623669. For more information on hard money lending, go to thenorrisgroup.com and click the Hard Money tab.
For more information on hard money loans and upcoming events with the Norris Group, check out thenorrisgroup.com. For information on passive investing with trust deeds, visit tngtrustdeeds.com.